Welcome back to the channel. I'm Foreman, and today I'm going to be talking about the UK stocks that I bought, as well as the top riser and faller in the portfolio. I've also got something to announce, and before we jump into everything, I would like if you could drop one of these to beat that YouTube algorithm, but I'd like to talk about something. I've been reading a few comments, and comment threads have been a little bit more common lately. Usually it would be someone in the audience or one of you watching this video, you might ask me a question, and typically I'll respond. However, what it is nice to see is that there are more conversations ongoing between you all in the community, and it is really quite a nice step to see, because it's not just myself answering questions, it's more of a active discussion in the comment section, which I'm really coming to like. I was caught in the middle of a discussion, or I at least was reading through it, between, I believe, Dan and James. Dan had recommended that I should read The Art of Execution. This is a book by Lee Freeman Shaw, and this is basically a book on the idea of how the world's biggest investors got it wrong, but they still made millions of pounds. And that is something I've not read yet, but I look forward to reading in the next few weeks, as it is something that certainly sparked my interest. It goes more into the whole mindset behind investing and what they're able to do even when they do get it wrong. So hopefully I will be able to enlighten you in the next few weeks of what I've learned from reading this book. And then if people enjoy that kind of topic or information, then perhaps I could create more videos on new books. What I've done as well is I have a link in the description, and no, I'm not promoting it. There is one for MONEYDASHBOARD. Every time a user signs up to this link and connects a bank account, it tracks all of this and your spending and net worth. It would then, every time 3 people do this, I get a £15 Amazon gift card. I figure, why not invest these gift cards into my own mental experience and knowledge? And so the idea is I'm just going to keep investing these into book ideas. So if you do have any book suggestions, I'm looking for something a bit beyond the mainstream, something that you may think could fit perfectly with my investment strategy. It'd be much appreciated. Anyway, without further ado, the FTSE 100 this week is actually up by 1.29%. The FTSE 250 has done very well and is up by 2.21%. And the S&P 500, as of recording this video, is roughly up 0.5%. My portfolio has done okay, but really it's trading sideways for the most part, but it is up 1.35%. And that could likely be attributed to the top faller in the portfolio this week, the likes of Argo Blockchain. And this is easily the most volatile stock in my portfolio, as it is a Bitcoin mining company. And it basically means when Bitcoin goes down, shares are going to go down by a further amount, because their revenue or future expected revenue and earnings are based on the price of Bitcoin. Although we do have those very grandiose, if that's the right word, forecasts for Bitcoin at the end of the year, or perhaps a year's time, that are saying, hey, look, Bitcoin could hit 6 figures. This, for the likes of Argo Blockchain, would be amazing. And I feel it's better than buying the underlying asset itself, because Bitcoin itself, I don't see as a productive asset. I see the use case for it as a store of value, hopefully in the longer term future, and something that you can keep tucked away from perhaps the likes of governments, although this is speculation on my behalf. And I can definitely see the appeal for it in perhaps LEDCs, lower economic developed countries. I learned this in geography about 8 years ago now. The idea is that these other countries, let's say ones with high levels of inflation, their money, if put in a bank account, is going to lose it. And especially with interest rates, probably going to be quite low. The idea is that if they put it into Bitcoin, it's a risky investment, but then hopefully there's that chance, one, that it could go up massively and they could retire from it. But at the same time, it's where they can put their money without it being touched by anyone unnecessarily, or authorities, for whatever reason, be it something dodgy or not. The idea behind it is, and I like Bitcoin, I like the concept of it, I like the idea. I do not in any way, shape or form understand the underlying technologies, and for that reason my position size is far too high than what I should really have based on my conviction. I mentioned this in my biggest mistake, which I'll put a card at the top right of the video for you, and I basically said that this was a mistake as an investment. I bought too early and I bought too much. It takes up too much of my portfolio for my real bull case of the underlying asset of Bitcoin. Don't get me wrong, Argo Blockchain, aside from a few blips in the management history with being a bit misleading towards shareholders, the company itself and the industry it's in is strong. They have competitive advantages over others like Marathon Patent Group and Riot Blockchain, even High mining farms, I believe. The idea here is that yes, they're a very strong company in an industry that is growing very fast. If Bitcoin goes up, then they're set to do very well, with a hodl of around about 1,400, 1,500. And I believe in this last month, they mined something like 225 Bitcoin, which was a large step up from the previous month, which was around about 160. These are all promising signs to see. This is a medium-term investment for myself. well, I say a majority of this investment is medium term. The idea is that once it gets above my average, we see that listing onto the NASDAQ, hopefully, and that Texas facility is finally built and it's not just roads being built at the moment, then hopefully shares will be higher than my average price, in which I can take profits, cut down a majority of the position, scale it back to my true level of conviction, because this is a stock I'd like to hold for the longer term, but in current weightings in my portfolio, it's too much for my comfort zone and was likely adding to my stress, but I feel for now, in the next few years, I can hold on and be with it. Whereas the top riser in the portfolio is in a completely different industry doing different things. This stock is Games Workshop, or GAW. Shares are actually up by 3.70%. And they have naturally recovered from about 2 weeks ago when they had their results and expectations were likely higher than what the results were and shares had dropped. I did love about this, I bet you actually it was a week ago, what I did like is how that their growth in Northern America was fantastic. And this is a very big market to gain exposure to. Yes, their highest market or their largest market is the US. The fact that they're still growing it by considerable amounts, and this is from the top of my memory, but I believe it was around about 60, I'm going to say 50 to 60% growth of revenue growth. And that is truly impressive. This shows to me that the Warhammer brands are picking up, they're gaining even more in popularity. In fact, it seems a lot more mainstream than it was perhaps, well, I'm going to say 20 years ago, where gaming has become more of a casual thing. Everyone can get involved in it and it's not really looked down upon. It seems like all of these gaming communities can really talk without having to worry about others and their judgment, which is a great thing. It's a positive move for the company. I look forward to seeing the subscription service, which should be releasing in a few months. And this is Warhammer Plus, and I will likely be buying it myself, even though I don't actually play the tabletop game, nor do I keep up with the lore that much with the likes of Black Library. I've not got any of their books. What I have done is played a few of their online games in which they gain royalties from. I'm interested in this, so perhaps a subscription into Warhammer Plus can help boost conviction, and I'd love to go down to one of the stores in a local town and see just how well they're doing, especially after the current pandemic is dissipating. And if you'd like to sign up to Freetrade, this is a promotion, my stockbroker, to get a free share worth up to £200, then use my link in the description down below. Not many people have signed up in the last 2 weeks, and that's understandable, but I just keep promoting it as for myself, it is another form of income stream and does greatly help when things are maybe a little bit tougher with a full-time job. And then the stock I bought this week should come as absolutely no surprise. It's Boohoo yet again. Once more, I'm wearing one of their shirts. I'm going to be going out in about 20 minutes time as it's late on a Friday evening. And I figured, you know what? Why not? Besides the point, Boohoo are one I very much like. There seems to be a lot of fear, uncertainty and doubt at the moment. It's almost as if perhaps it's more short-term holders that are concerned about the damage to the brand. But what I've seen in the last year and a half is that Boohoo's brand really wasn't damaged because the target audience or the ideal customers of Boohoo don't care about that. And so, yes, it might hinder their growth into other sectors or industries or even age demographics, and they may be more ethically conscious. What I've seen for is the most majority of their consumer audience is one that really do not care. Yes, the US lawsuit with the fines of up to $100 million. Yes, this can be difficult, especially because the founder did not want to talk. Yes, this doesn't have a great taste to it. I'm going to continue to hold. This was always my second highest conviction stock. I've always been bullish on Boohoo, and a few short-term media articles getting sensationalist clickbait using the name of Boohoo really doesn't bother me. In fact, I'm grateful for it because it's given me another chance to top up my position in one of my highest conviction stocks. In fact, it's so close to my average price that I'm at very happy levels. I'm going to be even happier if it continues to drop, because I do have powder to use or cash on outside of the investment account should it drop further. This is a company I think will do very well. Yes, about a year and a half ago, I made a very strong figure, and I believe that they would reach £10 by the end of 2023 per share. Realistically, maybe this won't happen anymore, but this was always a random prediction. What I have seen from it is that there is a good chance to make some good money from the current price. And I think over the longer term, this will be definitely a dominant brand. We're already seeing the acquisition of Debenhams and how they're going to start expanding into that beauty industry. And then once they've moved on to beauty, they might find another one, create a trifecta. Again, I'm using a word that I don't fully understand to do with gambling and not really related to businesses. But the idea is three core industries, and then they're going to keep expanding out. What I see here is the likes of an early Amazon. Amazon always started as a book retailer, as I bought The Art of Execution from them. And so I definitely think there is potential for Boohoo in the longer term future. And there is obviously other competitors, but Boohoo certainly has a strong spot because they're able to get very fast delivery at low prices. Although one could pair it to the likes of ASOS. And ASOS's results, I think it was about a month or two ago now, their results had shown that actually they dominated the UK market and grown far higher than what Boohoo had done. However, what they had also shown is that in the US and the rest, well, in the US, they'd done a lot worse than what Boohoo had done. And so basically the trade-off now seems to be between the two investments is that ASOS might be a good buy if you're bullish on the UK market and think there's a lot more growth. But Boohoo really seems like that investment for more diversified worldwide growth, and they can build up their exposure in the US, but also carry on dominating in the UK. Although for both of the companies, the rest of the world and the rest of Europe had been mild in terms of growth, well, around about 15%, which isn't really mild as far as I'm aware. Actually, forget that figure because I'm making it up off the top of my head. It's probably not even accurate. Regardless, I bought 48 more shares, which is part of my weekly top up into the portfolio, and I figure out I'm going to keep doing this if so. And even lately, I'm spending more money. You may think, okay, how's this relevant? Is he flexing on us? How dare he? No, seriously, I'm spending more money. So what I think I'm going to do is I'm going to increase the amount of my weekly deposits into Freetrade and pay myself before I get paid, if that makes sense, by moving that money out of my account before I have the chance to spend it. So it's only going to be a small figure, but I think I'm going to up it by around about £25 per week. So that now I'm depositing more money, as this has been certainly a slow year so far. Even a graph in the last year shows how sideways and flat it has been recently due to the volatility and the deposits not quite outweighing the weight of my portfolio falling. We've also had Team 17 and Ashtead Group continuing along. Team 17 seems to be dropping and it seems to be cooling off to find its correct valuation after the hype of another stock, was it Sumo Group, being bought by Tencent a few weeks ago, and also the likes of their strong results. Either way, I'm happy to keep holding Team 17. I'm going to wait until they drop to a lower price where they become a more attractive valuation, and then I'll look to buy more. As with Ashtead Group, I really am not sure. Obviously, you've got the US infrastructure stimulus, and they've got a large share buyback program, but I don't know if it's a stock for me because whilst I like the idea of long-term leases in the industrial and construction sectors and agricultural sectors, it's not really something in my understanding. I'm not in any way participating in these niches, and so I can't really look at the dominance of Ashtead Group or Sunbelt Rentals or A-Plant, as they may used to have been called. And so it's difficult for me to follow, and I don't exactly see it as a sector of high growth for the future. And I think that's something I should go back to. I need to go look back and think, okay, if I could name a few core sectors for growth in the long-term future. Obviously, I think gaming is going to be one of them. I think crypto is likely going to be one of them, which at least if I'm ignorant, I should have some exposure to. But other than that, I'm not entirely sure. Obviously, online retailing will continue to be big and likely will compete very much against the high street stores. Other than that, I'm interested in ideas. I was recommended by, I believe, Stephen, and he said the idea of cyber defense or cyber security, which is very interesting to me, and that'd be a stock like Darktrace, although at their valuation they are very, very high. Anyway, if you'd like to see my free UK stocks to buy in August 2021, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.